What's going on, everybody? Thank you for joining me this Friday as the market is making me sweat. No, I just got in from a little bit of exercise. That's why I'm sweating. So if I dab my towel, I needed a break. I'm sure a lot of people do as well. I'm going to talk about that. I'm going to be open and honest. I'm not happy with today. I am not happy at all today. And if you were on Discord today, you got to listen to me complain about that. One second, let me fix my window here. Okay, no, there we go. All right. So, yeah, we're going to talk about losses. And you can see on the this side pane right here, just about everything is bleeding today. What do I think to do about it? Well, I know what the right thing to do is. I don't necessarily want to do it, nor did I actually do it today. I'm going to leave that decision for next week, actually, but we'll talk about that. I got a couple of notes that some people left on Discord to talk about, and we're going to get through this before 5 o'clock because I try to join another live stream afterwards. So let me bring up my notes for live stream. I see Frank's there. We'll talk about Dow. I want to talk about Facebook because this has been an interesting story for several weeks now. Already got it kind of annotated there, and I want to talk about my high conviction trades coming up as well. So let's readjust this so that you're not just staring at me. Give me a yay or a nay on Discord and whatnot. Am I coming through? Can you hear me? Any problems with sound? Anything like that? Anything I need to worry about? Lag? Good? Give me a thumbs up. Yes. Okay. Yes, it's going through. Clear on Discord. Okay. So Discord usually ends up being the good one. Yes. Thumbs up. Thank you. Welcome, YouTube folks and Tradingview folks. Appreciate you joining me. Hopefully, I can give you guys some contrarian thought. Yeah, so let's just talk about this big red line of just. Bleh. Yeah, the only thing up is the VIX. And if you watch my weekly Sunday evening videos, which about 30 people do, thank you very much. I noted when we were right about here, it may be my connection, but I'm freezing every 10 to 15 seconds. Okay, let me look at it. Looks like my connection is doing pretty well. My Jiha, how's it doing? YouTube's good. Good evening. Good evening. Okay, if it starts freezing up, I might tweak one other thing. Okay. So I noted that we probably needed to pull back. Where's my camera? Over that way. I'm gonna scoop this way. Yeah. We probably needed to pull back on the VIX to 27, which has an inverse relationship to the stock market. And we actually hit it today. Sunday night when I was making my video, that would have been, what is it, April the 17th. We were sitting at this point right here. Okay. And I didn't want it to go there, but yeah, it did. And so now we actually got today, intraday, that pullback on the VIX to round about 28. That is what I was looking at for a potential market bottom. And I'm saying potential just to kind of hedge it because, man, 3%, this thing into the close. Oh my goodness, this thing is even going down more. I was able to actually squeak out a little long right here. And then I got stopped out on it because I'm trying to be contrarian. But man, we're going to talk about this a little bit. Crypto is also down. And I do have a thesis on that. But let's just talk about the stock market. So going into the close here, I said it on Sunday. I was looking for a pullback on the VIX to the 28 level. That could potentially signal a bottom on the stock market. Don't know. I hope so because I'm long a lot of stuff, and I want to talk about one in particular that's really giving me grief, and in the context of what you do as a professional. So that's one thing we're going to talk about. And since people are kind of filtering in now questions, put it in the chat. I'll look at some symbols that you want to. I'll give you my opinion. They're probably not going to be what you want to hear, especially if they look like this. If you tell me a cryptocurrency whose chart looks like this, and you ask me what to do, I'm going to stare at you blankly and wish you good luck. Because everything's just down today, and let's just jump into it. This is the elephant on my back right now. So I've been talking about Google and Amazon for many weeks now. I'll be transparent. I initiated a buy of Google at about 27.60, and then on the Russian invasion of Ukraine, I added to that Google position here. I thought it was super awesome. I thought that was a super awesome entry. And we are now breaking these lows. That is not good. That is aggravating me. I think they need to turn the money printer back on. I get print money. Cut this out. Stop it. Stop it. Stop having creative destruction. Stop making me realize the other side of the risk equation. I don't like it. I don't like it at all. Stop it. But I'm going to make a decision next week on Google. And it actually has earnings on 26th, which is Tuesday. So that's 2 days into the week. Oh, man, it's going to be a hard decision. I really have to close it. It pains me because I'm so convicted on it. And I actually had a discussion with someone today about it where, they said, are you adding? Because they know that I've been buying Google. Are you adding at this price? I'm like, no, I'm thinking about closing it. And they were very confused. Like, what do you mean? Like, you're going to have to take the loss. Why not dollar cost average in? It's like, honestly, I don't believe in those things. And I think it's the crypto world that has turned me against dollar cost averaging, because people have taken this old decade, century-long strategy of dollar cost averaging into stocks, which they represent companies that make money, generate revenue, and provide discounted future cash flow in the form of a stock price. They've taken that to mean I'll buy shitcoin, blah, blah, blah coin at 0.000001, and then a week later, when it's gone down 50%, I'll buy more of it. So I'll buy 1 million of it this week. I'll buy 2 million of this coin next week, and I'll call it dollar cost averaging, because eventually it's going to go to a penny and I'll be a billionaire. No, that's not dollar cost averaging. Nor do I even think that it's a good idea, because look at Netflix. I made a video back in February when I bought Netflix on this pullback. I know a lot of people bought into Netflix because everybody has Netflix subscriptions, and therefore it's a company that you want to own, right? Because everyone has it. But I've known kind of in the back of my mind that they're facing a lot of stiff competition from Amazon and Disney and all these companies with a lot bigger pockets to fight Netflix. I mean, Netflix just has Netflix. Amazon has the world. That being said, cool story, bro. I got into it here and posted about it, and then I cut it when I had to, back when it broke below that low. And at the time, I made a video talking about Bill Ackman. And Bill Ackman had taken a $1.1 billion bet at around an average cost of about, I believe, $350, something like that, somewhere around here. He bought it in here. And he dumped it. When earnings came out and Amazon lost 30%, he closed it. He took a $400 billion loss, which in the scheme of a $10 billion fund that he has is only 4%. So he's essentially managing his risk. His thesis is wrong, and he's willing to accept it and take the hit instead of riding it all the way down. And I think what's happened over the last year or two is a lot of people have been dollar cost averaging into stocks that they really like, that they really want to own, and it's just been bleeding out. We are in a different market. And I will admit, I've been a little slow to recognize it. I was talking on Discord today. I've got to, I've had a hard time shorting because I have a portfolio of winners that I don't want to see down. And this is me being honest as a trader, not fronting that I know anything about anything else. But when you have a bias, a bullish bias, you don't want to do things that reject your bias. It's very easy for me to short crypto. And it pisses a lot of people off because a lot of people have the opposite. They are incredibly long crypto. I have been hedged or short crypto since November of last year when it failed to break out. When Bitcoin and Ethereum, yeah, we're going to look at the volume profile here a little bit. We're going to play with that if we get some time. When Bitcoin got up here and could not break higher, warning, danger, Will Robinson. I made tons of videos, even in all caps. This is a problem. It should have gone. And so since that happened, having a decade-long experience in crypto, knowing that we've been through these cycles before, I'm very okay with not resting my entire financial future, my hopes and dreams of being a billionaire, on cryptocurrency, that I'm able to not be long and be short. But a lot of people they can't do it. A lot of people can't imagine the bags that they are holding going down anymore. In fact, I saw an article from Arthur Hayes, which I've talked about a lot, former CEO of Bitfinex. I'm not a big fan of his because he cut off Americans and they still issued an arrest warrant for him. He should just renounce his citizenship like a true patriot of cryptocurrency. He talked about a potential disaster in the cryptocurrency space coming up this summer. The disaster he foretold was Bitcoin dropping to 3,000. That is the disaster. That's an optimistic disaster. That's like saying we're going to get a hurricane, but it's only going to get category 1 and that's it. I happen to actually know from doing like an unscientific survey of people's liquidation points. I try to collect as much as I can. There's a lot of people that cannot take it if Bitcoin gets down to around 16,000. I've started. My number was 17,000. Excuse me, not 100. 17,000. Because that would represent the best case scenario for a pullback. There have been 4 past crypto bear markets in Bitcoin have gone from 75% drawdown to 85% drawdown. The best case scenario for a Bitcoin drawdown is 75%. That's the best case. And that puts us at about 17K from the all-time high. Worst case puts us in that range, and it's no accident, really. I've been doing this for so long. I don't know what the future holds, but it's no accident that I know so many people whose liquidation points, either on margin or in their DeFi contracts, which I don't know that much about, but I know where their liquidation points are. There's this cluster of people around 16,000 that they cannot afford for it to go to that point. And it will. Okay, you hedge that. Look, the market wants to hurt as many people as it can. There is a giant payday for people that want to get long cryptocurrency on people dumping their coins into the teens. And I'm saying this now at 40K. It's a little premature. I don't want this to happen to people. I'm just saying that it just happens so much. I mean, let's go back to Netflix real quick. I'm going to bounce around a little bit. I got some exercise. I'm animated. I'm just going to bounce around. I know I got some questions to get to. I'm going to, but yeah, post your questions. We'll get to them in a second. I had a good friend that worked for Netflix, and I've already annotated this. So let me clean it up a little bit. So she worked for Netflix and she had a lot of stock options in Netflix. And around 2018, we had a lot of, Netflix really kind of went into its own. It was up a lot. And I said to her, like, hey, you probably need to diversify a little bit because that's all they had. And so, using the same analysis that I use for anything else, I saw where Netflix pulled back. They came off of the high, pulled back to a 50% retracement level. Okay. And I don't tell people what to do with their money. I'm not your financial advisor, but I strongly suggested that it's a good idea to, in practice, diversify, not have every single bit of your retirement in one stock, even if it is going crazy. Well, I think she did actually take some off, and I felt really good about that when it did a pullback. Incidentally, where did it pull back to? It pulled back to the 50% retracement level there. And then it once again held that level. I actually took a trade when it pulled back to it again, holding that level there. And come on down towards the end. I know you. There you go. So got that, okay, and thought, okay, well, now it's going to go through a real pullback. But no, now we're getting into 2020. We're going to get into streaming services, what everyone's watching when they're at home, and we basically know there's COVID, but there's COVID. So that is what Netflix ended up doing. Let's speed this up a little bit. And so throughout this whole time, I'm feeling a little bad actually that I had, tried to convince her that she needed to diversify a little bit, because clearly in the late 2020 and throughout 2021, selling your Netflix at 376 seems like a really dumb idea, in hindsight, especially when it's up around 500. And especially when it comes up to 600, especially when it comes up to 700. And now it's doubled from the point that this is why I don't give financial advice. Hashtag this is not financial advice, because I don't want to be responsible for people coming back and saying like, hey, you cost me all that. But you know what? Where are we now? I'm neither right nor wrong. I'm both. But this is a lesson for everyone that wants to study markets. These narratives that everyone buys into, they are great until they all come full circle. I mean, I made a video for Best of Us Investors. I made a post on my YouTube channel. I know I posted on the Discord. Please watch that video. It's one of the ones I put a lot of thought into about ExxonMobil, which I'll do a quick recap here. But, ExxonMobil was, quote unquote, an obvious trade to me back in January of 2021. And it was hard for me to buy it because it was already up 21% year to date. I thought I was getting into it late. I even made an idea where I think I posted, let's see, hold on. Close your eyes and buy, where it was kind of like, I was like, oh, so hard. But it was given a 7% dividend yield, and it was below book value. In other words, the market cap of the company was, if you took all their assets on their balance sheet, their drills, their trucks, their buildings, everything they owned, it did not even equal. It was like 55. The book value of the company was $55 a share. The company was worth nothing else. Everything, hard assets, $55 a share, and here it was trading at 47. But it was hard for me to do that because oil was dead. Oil had gone to $0 a barrel. You got to remember the beginning, January 2021. You remember NEO? Do you remember Nikola? Do you remember all the EV was the future? And that was the narrative. And it was very, very hard for me to even see past the obvious trade here. And there it is. I'm so glad to be long ExxonMobil. Whereas, you look at your NEOs of the world right there. At the time when ExxonMobil was at its most bearish, this was on the rise. Yeah, there it is. January, when the time to get into dirty energy was when everyone was convinced that EV was the future. I mean, it is. It absolutely is. But this is what is so dangerous about getting in with narratives. And, with Netflix, I mean, I don't know what the net, but Peloton is another one. Talk about a pandemic round trip. I mean, this one was obvious for me to stay away from. Who has exercise equipment in their house and they use it for a few months and then it becomes a clothes rack? Yeah, that I saw that with my parents buying exercise equipment, and the fact that you're going to run a company on a subscription-based model. Yeah. So, all right, we're going to get to questions here. One final thing about cryptocurrency, because I know a lot of people watch it for that. It's very simple to me. The simplest thing I can say about cryptocurrency right now, and I don't like saying this because I know a lot of people are bullish on it. I really want cryptocurrency to succeed. I'm fascinated by the stuff that's going on in the distributed finance, the DeFi space. I really, really want to get into that and start working and learning about it, but I can't bring myself to invest in Ethereum right now to then transfer that into the DeFi space because I am bearish. Ethereum from the high to the low, the bear move that we had from the top in November, it came up to 3,500. It smacked it, and it had to clear that. It had to beat 3,500. It had to clear the 50%, but it didn't. If we can get back up in here, then okay, now we can talk. But man, this I'm sorry. That's so clear to me. I hope I'm wrong for everyone that's super long. I'm flat. I'm hedged, completely hedged. So it doesn't matter to me either way. But I'm still short Solana off this right here, and I liked this little move that it did on April the 18th. Like all the cryptos out there gave a little bit of a bearish maneuver down. Let's look at it a little bit closer here. So it did a little like false breakout here to the downside, which normally I like to see as a potential reversal. Ethereum did the same thing. A little short-term swing, false breakout, comes back up, but stalled out. Bitcoin, same thing. It's done some swing highs, but they've just come up to resistances and they've held. And now you're testing the low. Now you're actually back at the bottom of this range. And if I had to speculate going into this weekend, this thing's going to break the lows, especially coming off of the FUD that we have today. I mean, here's another thing. Look at this on the side. The S&P 500 futures and the Nasdaq down 3%. They're down more than crypto. That's that's crazy. That is crazy. Okay. All right. Let's talk about some other stuff. Because I just see it here. Nvidia is yet another high conviction trade, raising that I'm going to have to close. Sucks. It does. It does. I'll admit it. I'll just be honest. I'm not having the year that I wanted to. I had a great 2020. I had a great 2021. This is the life of a trader. Nvidia, it held its 200 level here. That kept me in it, but it gave it up. Just like Google. Look, I want to own these companies, but I have seen some things. I have seen some shit. I go back to Zillow from last year, where I've still got it annotated. I got in on 113, and as much as I hated, let's just look at it. Hold on. So again, the level that I got in was a 50% retracement. Let's look at the weekly. That's a little easier. Yeah, the 50%. I got in on a support level. And when it finally came through and broke that level in July of 2021, I got out. Just very simple, breaking lows. It tells you, look, I'm making new lows. It's warning me. I hated it because I like the company, but I also like protecting my capital much, much more. I hate taking losses. But you gotta look at this when you're looking at your well, okay, not you. Hashtag not financial advice. When I look at my Google, which I love that position because the split is coming up. When I look at my Nvidia, I love that position because I've been in it for a long time. Since Nvidia and I have a great story. Nvidia and I have a great story going back to 2021. Where's the split? Because I know where it was around there. Yeah, Nvidia and I have a great story back around here where I got in before this little pump right here. Got in on this pullback right here. I'm sad. I'm sad to see it go. I am. But I remember things like Facebook, and Facebook was another one. This is a swing trade. I've tried to help people. A lot of people I know a lot of people. They bought Facebook. I made it a meme. Facebook can't go lower. They bought Facebook thinking that they were getting great discounts on a uber mega cap company, only to see it bleed away. And then this week before last, I bought Facebook to on my strategy, and I reluctantly, because I wanted this would have been a textbook case. I try to only take trades that I call textbook. In other words, I'm going to take a screenshot and I'm going to put it in one of my folders, and it's going to be my list of my archive of success. And I don't want to put random stuff in here where I take a look at it later. I'm like, oh, I just got lucky. I want to see the things I trade on come together. And in this case, it was the reaction level up from March the 15th to April 5th, pulling back to a 50% level, and then giving me a little spike here. That's what I wanted to see. But when Facebook came down on this date, when it punched its hole below that low this week, Monday, I didn't want to. And then what did it do? It comes up and it teases me. This is what happens when you get stopped out a lot of times. It teases you. It's like, haha, you need a wider stop. It draws you in. It tries to get you to break your rules. Well, yeah. I hate taking losses, but I think when you first start out trading, um, you get into some bad trades, and you get out, and the market it reverses on you, and you're like, oh, I'm such an idiot. I'm fortunate enough at this point, years in, that doesn't happen very often. More often than not, like I showed you in Zillow, like I showed you here, um, when I go back and look at losses that I've taken where I've stopped myself out, I'm super glad that I did, because this right here, I took basically let's call it a 2%, because I'm bad at math, a 2% haircut on my position in Facebook. So in other words, if I had allocated 10% of a portfolio in stock to Facebook, I'm talking about just stock here, not option trading, then that 2%, if I had held on to it, it's a minor loss, but now that 2% is down almost 15%. So now I'm down over 1.5% on my entire portfolio, holding it instead of the small loss. And I'm glad. I'm glad to be out of that, especially because now Facebook today is even breaking the lows that it set back in March. Yeah. So, I keep getting reminded, but even I'm not immune from the psychological pitfalls of liking a position and getting married to it. I am married to my Google position. Oh, it's frustrating. It's frustrating. It's frustrating. It's frustrating. All right, let's talk about y'all's problems. All right, let's see. Paper trade, Frank, you still there? All right, let's take a look at Dow. I know you wanted me to look at that. If you guys got questions, post in the chat, either in the just chatting of Discord or in the chat of Tradingview and YouTube. All right, Dow. You're talking about the chemical company, Frank? Frank, you there? Help me out. I think you're talking about Dow. Let's see, not Livestream notes. Yes. Okay, Dow, the chemical company. Okay, so this is Dow Inc. All right. So what are we? Well, Coca-Cola went bearish at the close, yes, but Coca-Cola also this week made a new all-time high. I am actually not worried about my long sugar water position. Oh, look at that! It's a spike. In fact, yeah, Philip Morris is another spike that I saw as well. I'm not worried about these. Okay, so it's not all bad. This is why it's good to have a diversified portfolio. Um, I got long sugar water, Coca-Cola, because it's acting like a growth stock. When it pulled back here, really great level, 57, 55. Posted about it. Hope you're following. By the way, let me put a plug in here. Discord link. Oh, did I put that in the YouTube thing? Hold on. I need to add that in. Sorry. 1 second. But Frank, tell me what you want to look at Dow. What's your thesis on Dow? Okay, actually, I'll read it while I'm doing that. Let me add in the Discord link because I just want to talk to people. This is my plug for Discord. I don't charge for it because I don't believe that I can guarantee you reading it you're going to make YOLO gains, but I do my best to provide value to people. So I'm going to post that link. Give me just a second. Make sure to update the status. Got to do that because, like I said, I was out exercising. I didn't put a disclaimer there. We'll put that later. Okay. So yeah, come hang out with us on Discord. All right. So Dow, I jumped into Dow as a value consumer play in early March. Good thing to do. I don't know if I need to start adding more. Okay, so March to April, let's hang out. Yeah, it's so. Just as a recent example, in ExxonMobil, which was another value play, if we go back and look right here, so I actually updated this. Okay, so January 25th, I got in January 14th, and I added a little bit more on the 25th. Okay, and then wait a minute, 21. Why is it saying December 2nd? Hold on. This was January 14th. Oh, because it's December. Okay, so I didn't add again to my ExxonMobil position until I got another setup in December. And this was actually really good because I already knew that I was long Dow, right? And I was long from January. And here we've had quite a run on Dow, and then it gave me an entry on December, gave me a spike here at support, and that let me get in to another position that was about right here. Okay, yeah. See, December 3rd was here because what basically happened was I got in January, right here. Okay, I think I added a little bit more towards the end. Okay, so I got the position I wanted there. All right, as big as I wanted to be. And then it took all the way through until it did this little maneuver here in December, pulled back to this area here, did a little annoying thing right here. I stayed in, but again, it was playing off this setup months later after my initial position back here. I already have a pretty good buffer, right? And that was able to let me catch, the final leg. So going back to Dow, if you just added into March and you're wishing that you had more, I don't like it that you're basically up at the resistance here, and yeah, you don't have a close above these levels. So okay, that's my answer. Let's get a close above this level. Okay, glad that you were able to get it on the pullback in March, but you need a close above here. And if we look on the weekly, I'm not sure why this starts in 2017 because is this the company we're looking at? Did they spin off a different symbol? I'm not sure why it did that, but yeah. Coca-Cola. Did you ask about that one? So Coca-Cola when it came back up to its high here on April the 7th, closed above it, you're good to go. Okay. So Dow, I want to see this give you a good solid clear here. Go up to the weekly, and before you start adding to it, get you a close above those. That would be what I would say on Dow. Like, get yourself some confirmation. Okay. All right. Somebody want to look at JPM? Yes. Okay. Hold that thought about JPM. I actually want to make a segment. I actually want to make a segment about that. I may make actually. I'll talk about it extemporaneously because I want to make a whole video this week. I meant to this week. Didn't have the time to do it. Sector rotation. So real quick, because you asked, JP Morgan. JP Morgan has, again, I've from the COVID low to the recent all-time high. I've been trying to tell people to chart for this in everything. Look for everything. Every stock out there had a low from COVID, and not every stock, but most stocks had an all-time high sometime last fall. And a lot of stocks in this market, which Raisinets, I don't think it's a bear market yet. We're still within correction territory because we still haven't broken that Ukraine invasion February 24th low, which was 14% off the all-time high. So you're still in correction range. Correction range is 10 to 20%. We're still there. It's not a panic situation yet. That's why it's so frustrating, because I know that we are still statistically inside a standard, totally average correction, but the positions I have are weak and the rules say I need to dump them. So yeah. Dear Ernie, yeah, I'm dude, I'm with you, man. But Google. Oh, AMD, Min Lao. AMD, I cut it. I cut my AMD the same time I cut Facebook this week. I didn't want to, but it broke the lows. I got in AMD here on March the 8th, and I got a little bit out, but not as much as I would have liked to here on this run up. But I cut it on Monday of this week, and now we're down how much more? So again, it goes back to the whole, another 10%. It goes back to the whole thing. I hate taking losers, but it is what it is. JP Morgan, I'm going to make a video about it this week. I like it. The reason I like it, let me bring it up right here, is this. JP Morgan doing the same thing that Bank of America did. Now, Bank of America got back down here, but Bank of America on earnings, it pierced through this low that it set back in March. Okay. Bank of America now, it actually did confirm that low. So maybe not. What did JP Morgan do on the weekly at the close here? JP Morgan, it closed below the weekly level, but its actual proper 50% level is 124.95. Let's call it 125. These are interesting to me, and here's why. So sector rotation, one of the most popular things that I've made videos about. Sector rotation. So let's do a quick review. Here is the sector rotation model. Let's get it up here. Okay. So in a market bottom, when the market bottoms out, like we had in COVID, what tends to lead out at and out of market bottoms is tech stocks. Definitely what happened at COVID. Consumer discretionary, luxury goods, same thing that happened. So what we can do is we can go back here and we can look at basically the 70 days after, let's call it March. Okay. So yeah, basically this is in the 70 days is roughly about March to July. It's about one quarter, about 65, but it's close enough. So in the first quarter, out of the market bottom, tech, communication services, and discretionary all led. Utilities, financials, real estate, staples, healthcare lagged. the market, but the technology definitely, and that became even more pronounced if you start going out to, let's call it 120 days from the market bottom of March 24th. Yeah. Tech, discretionary, exactly what we would expect out of a market bottom of COVID. Tech, discretionary, communication services, industrials, materials. They all led us out of COVID. Okay. Now, what ends up happening at a market top? What happens in a market top? The theory says that energy leads at a market top. And so, what happened at the end of 2020 was energy was leading as oil was going up. I thought that was going to be a potential market top. It kind of tricked us out a little bit because then tech began leading again inexplicably, and energy began lagging. So sector rotation model sort of fell out of favor. I even made a video saying like I'm confused, but it's been very clear in the last 2 quarters what happened. Basically, energy started leading from last quarter until the first one. This is 2 quarters. 2 quarters, sorry. And so where we stand right now in the recent past 2 quarters, energy led at a market top. As the market begins to round over, as it's doing, consumer staples, your Coca-Cola, your Waste Management, your Costco, Philip Morris, Altria, MO, these, my winners, have been telling me that consumer staples have been in favor. Then, of course, healthcare outperforming the market, utilities, defensive plays. So the next thing to lead, if sector rotation follows as it has been doing, loosely, but it has been following it, is financials, then real estate. And if you look, real estate is, well, it's already going because of what we've had, but financials over the last 2 quarters have underperformed. And you can see that in your JP Morgan, in your Bank of America. Bank of America's 50%. I really want to see it come down to like maybe the 34, 36. What about Wells Fargo? Wells Fargo, where's that level? Maybe pull back to 42. We'll see. Truist Financial Company, some name, it's BB&T's what it used to be. That is also potentially pulling back. Kind of wonky. I may or may not get a technical level on the 50% here, but I'm watching for the spikes because if the sector rotation model plays out as the theory suggests, then financials should be the next leader as the market begins to round out and come back up. And then we'll see bottom in technology and the cycle will continue. So yes, JP Morgan, good question. I'm frustrated, but that doesn't mean I've given up on things. I am looking at the financial sector as the next sector to rotate following sector rotation. So that is the opportunity that I am looking for right now. I don't know when the bottom's going to be, but my eye is on it. I'm watching it like a hawk because, I mean, that's the next best guess for where the money's going to flow. Right now, money is flowing in. Well, right now, money's flowing out of everything, but money is flowing into the stocks in value, consumer staples, utilities, like Duke Power's utility. Now, just down a little bit this week. There's a little red bar, but what's it doing? Utilities are going up because people want that safe dividend play. Southern Company, utility company. These companies are doing well because they're considered defensive. They're doing very well. Everything else is down. They're holding their ground. So that tells us something. That tells us that sector rotation is working in line with what the theory suggests. And that if that continues, we need to be looking for opportunity in the financial sector to kind of capture that market bottom and rounding out. All right, let's look at some comments, and then I'll look back at my notes and we'll start wrapping things up in these last 10 minutes. HP, let's look at HP. Is that a tech company? Is that HPQ, as in Gord Dunbar? Is that HPQ? And thank you, by the way, Gord, for yeah, Hewlett Packard. Yeah. Thank you, by the way, for your opportunity. Hey, look who's holding their ground. Does this pay a dividend? Looks like a stock that pays a dividend. I would say from October to here, oh, it didn't even pull back to that level. Held that gap level there. So what bothers me about Hewlett Packard when I look at this chart is April the 7th. I don't like that you had highs here, and this actually kind of pains me a little bit. Just being honest with you. From a price action standpoint, you came up to this high, you held it initially, you tried to break above it, you couldn't, you came back and you tested it again, and you're falling off. I'm worried about being long this. Good example of this that I've used in a lot of my videos about false breakouts is Spotify, where Spotify came up in January of 2021. Again, came up to that level, failed to break higher. The general thesis is this, and it's the same thing that I talked about with Ethereum and Bitcoin. When something comes up to a high and it breaks it, you want that thing to keep getting bought. People really want it. People are continuing to buy it. If they don't, that is a problem. And so with your HPQ, it worries me for you. Again, hashtag this is not financial advice, but it's telling you in the best way that you can by looking at price action. It's not really leaving much doubt that 39, let's call it almost 40, is a resistance and is coming off there. So if you're long it, if you like the company, okay, but I would not add anything to it until you have a solid break of that level. So, all right. Thank you for sharing your work. I've been 90% oil and gas for the past 2 years, and I really want to rotate out. That's probably a good idea, but I've not been able to get winners elsewhere to hold. Okay, Ryan. I get it. I really think that we'll talk about oil for a second. Fundamentally, and I'm not that much of a fundamental trader. I've been watching oil. Oil has been really easy to chart. You had this December run from here to here. I thought it was going to stop out at 100. I even had this little spike here on the Ukraine invasion. But of course, it had a bluff top. But then it held the retracement level to about 96 here. Came up, held the 50% of the top to bottom here at 112. Came back down, held support again, and now it came back up. It's holding this rally. I do think that we're going to still see a pullback to 112. That being said, with oil, my working thesis is that this is what it's going to do for maybe even the next few years, because suppliers are coming online at $100 a barrel roundabout. That's a break-even price. Excuse me, that's a profitable price for a lot of producers. So they're starting to put more supply out there to meet the demand. I think honestly, what we're seeing here, this bounce really clear between levels, is an equilibrium of supply and demand being established finally. That's my working thesis. We'll see if it breaks out. So I don't think that you're going to lose anything. I think if you're long oil, you're going to get really bored. And I don't think you're going to make any money. I think you just have downside risk right now. I don't buy the thesis that oil is really going to go up that much more. Could be wrong, but I think you're going to stick around here. I think that stocks that pay good dividends, like ExxonMobil, talking my book here, are good. But if you're looking to rotate out into anything, there's actually an interesting thing that came about. I need to make a video about this because, like all the videos that I tend to make, which only about 20 people watch. So we've been talking about this week. The Treasury bonds. Yes. So these are individual Treasury bonds. You can buy up to 10,000 of these. Actually, you can buy a total of 16,000 if you put your tax return into it. If you get a $6,000 tax return, you can put it in on top of the 10,000. Right now, these are offering a risk-free, in other words, totally risk-free. These are Treasury bonds at 7%. because they're based on CPI, and CPI is so high, they offer 7% yields. Hold on a second. Actually, Zero Hedge had a really good, 2 days ago. I'm going to post this in the chat, all the chats for everybody. You need to read this because this gives a much better explanation. The interest on them actually compounds, and so you're actually getting functionally more than 7% over time if you hold them for a while. And I think the maturing date is 30 years. And so the risk here, the only risk is that you think that inflation is going to be more than 8%, which I think a lot of people do. But if you want someplace to hide at least $10,000, I'm doing it. I mean, why not? I mean, it's a hedge. I mean, it's a good place to put that away. I would love to get more than 7%, but it's a tool. It's a tool. It's a tool you can use depending on what you're looking at. Rotating from energy into finance, like I said, that is the sector rotation suggested model. But I would look for individual options there. Tech and growth. I mean, they're at lows. I know I've been. I got an entry on Palantir back here around 1040. We're not breaching that yet. I added actually some to Palantir here, and it's making me nervous. Rivian is holding its low here, so there is a technical setup on Rivian. So there are some interesting things happening in growth. I'm not shrugging them all off. This day today could be looked back in history as the best time to buy anything. You never know. But it is uncomfortable. But this is going back to what I talked about with the ExxonMobil video. The best opportunities start with discomfort because you're taking risk no matter what. If it was a certain thing, there would be no upside. That's the nature of things. So all that being said, I would much rather people be taking risk down here where the S&P is rather than where they were taking it here. I know a few weeks ago when I was on vacation and I was talking to people when we had this crazy rally up here in March, a lot of people started jumping into stocks right here at 44.55 or 445 SPY. They got a little bit of motion. They got a little bit of FOMO. That's what it was. I mean, this price action right here on SPY right here was FOMO. And the people that FOMO'd are now getting their comeuppance because this is not 2021 up and to the right. We are in a different market. So who knows? I think that it just wants to play games and shake people out of their positions like it does me. It wants to make me give up, the lizard people, the whales, whatever you want to call them. They want me to give up my good positions. And I sigh audibly. All right, let's wrap things up. Any final questions? Get them in. Got a few more minutes here, and then I want to jump on my Best of Us Investors conference call. So, anybody? Let me. I didn't even get. Did I get to talk about all my notes? Real quick, FedEx. I'm not one for talking about picks, but FedEx, I like. FedEx pulled back to its COVID low to all-time high. I made a post about it. A few people saw it. I try to be as transparent as I can. The reason I went into that, we had a spike here on the 30-minute, which lets me define my risk, but I have given it more than this. I'm basically going to give it, I've sized it so that I can hold it all the way back down to here, but this is just my initial entry. So that is the FedEx. That is what I took as an opportunity today. Man, I didn't get to talk about fixed range volume profile and risk parity. Okay, we'll save those for next week. So DXY. Oh, yeah, thank you. So that inflation thing that everyone is talking about? Well, people still want to buy these dollars. People still want the US dollar. The DXY, for those that don't know, is the dollar index. It is a measure, it is an index of the dollar relative to all the other world currencies. The euro being, of course, the most dominant one, second to Japan, yen. And what's driving this up is basically a currency war. You look at the dollar yen, it has been going crazy. The Bank of Japan is devaluing their currency as fast as they freaking can. I believe to stave off a recession. I don't know. They don't call me. I don't speak Japanese. Pound actually finally gave it up too. Again, dollar, you got GBP USD, and the other side of the equation. That means dollar going up means it going down. It's a math equation, division. Figure it out. I'm not good at math. Again, dollar going up in value versus the pound, and euro USD. These are forex things, and they're all happening. Dollar is going up, and so despite the fact that we have 8% inflation of our domestic goods, people still want US dollars. People still want the reserve currency. It is perplexing to me and vexing to, I know, the crypto enthusiasts out there that believe that the dollar is going to fail. Not yet. There was that narrative that I criticized a couple weeks ago that because of the Russia being kicked out of the petrodollar in the SWIFT, that was going to signal the end of the dollar as the world reserve currency. That is not reflected in the price, but just as everything else, Netflix, the stock market, crypto, what goes up must come down, but I don't see anything yet. I'll be watching the dollar though. But if you just have US dollars in your bank account and you're worried about inflation, you're like, you're actually a little bit richer than you were at the beginning of the year in terms of dollars, even though everything costs more. I don't know. I'm confused. I'm going to try to make sense of it. In the meantime, get your exercise this weekend. It's spring. Put you in a good headspace. I want you all to trade wisely. Join the Discord. Come talk to us and share your ideas. I want to hear them. Thank you all for joining me. I appreciate you spending it. Gold, XAU USD. I've been saying this for a while. The breakout in gold has failed for now. It could not retest, and you would think with all of this fear that people would be buying gold, but they're not. So sorry, gold bucks. Sorry, gold bucks. Elden Ring. Yeah, it's so funny. Man, isn't the market kind of like Dark Souls? Because with Dark Souls, when you take a loss, when you die, you start with less health. So with the market, when you take a loss, you start with less money. So, all right, trade.